welcome. Good afternoon to all. Hello. And the people that are here, feel free to unmute yourself if you have questions or just throw them in the chat and I'll watch that as well. But yes, Nikki, welcome. And I'd love to throw it right over to you. There's a lot been going on, so have at it.
Yes, a lot has been going on. So from a rate standpoint, the Fed has been extremely slow in saying that they're going to be lowering interest rates anymore this year. The reason for that is because we saw those inflation numbers go up a little bit, which usually gives them hope to be able to lower the interest rates. However, things have been just kind of going up and down lately. And so they're a little bit dovish, a little bit sheepish on trying to make any sort of movement on interest rates at all. But however, the unemployment rates actually come out this week. So the unemployment right now is at about 3.9%. If we see that unemployment rate raise, in other words, go to 4% or especially over 4%, the Fed is really not going to have much of a choice but to lower that interest rate to kind of keep a curb on the unemployment. If they do see that, we should see some positive movement in the interest rates. If we don't see that, then things should remain where they are. As of specifically today, we did see a worsening of interest rates based on the anticipation of those unemployment numbers coming out. So we'll kind of just follow things this week to see where we're at. If you do have any clients that are within 30 days of closing, today would be a great day for them to consider locking in their interest rate. If they are after 30 days and up to 60 days, I think it's more of a waiting game. So that's kind of where we're at from a rate standpoint. Last week, we saw some good improvement, which is going to, kind of continue to stabilize this week. So just some things going on as we receive extra numbers this week. So from an on the street standpoint, so obviously the NAR proposed settlement has really taken everyone for a role here. We'll just put it that way. And from a lending perspective, we have not seen any announcements come out from Fannie and Freddie. However, FHA did make an announcement this week to stick with their current guidelines as they are written. So right now, the FHA guidelines states that the seller paying buyers agent commissions is not part of the interested party contributions. So what does that mean? Normally, when you have an FHA loan, the seller can pay up to 6% of the buyer's closing costs and fees associated with the loan. Within that 6%, the buyer's agent commission is not considered part of that 6%. So they can pay the buyer's agent commission, no problem. There is no word yet from FHA on whether or not the buyer can include the buyer's agent commission in that 6% or whether they can pay it at all. So they haven't really made a determination yet on it. This has never become an issue from a lending standpoint before. And so therefore, we're kind of doing a wait and see. The reason for that is we are still in the proposed settlement stage. And so everything that's been going on, everything that everyone's been talking about, how the landscape is changing, it is all proposed right now. So from a lending perspective, we have no reason to change anything of what we're doing at this point until we get a firm answer and we can see what that landscape does. With that being said, from a pre-approval standpoint, depending on our conversations with realtors and depending on where the buyer is at with being able to pay those commissions, we have to take that into consideration from a pre-approval standpoint. So we will be talking about what assets do they have? How is that going to affect the percent down that they can put? Do we have to take agent commissions into consideration on the pre-approval side? And also, what is that percentage? So we know there's going to be a lot of variation and a lot of adjusting and things of that nature as we work through the details. But of course, as always, we're here to make sure that those details are worked through and that from a lending perspective, we're still compliant. So I wish there was more information, but as you know, it's everything is proposed right now. So we're just kind of on a wait and see.
No, absolutely. And I just, it's so interesting because like you said, it's proposed and then how quickly will it go into effect. So do you have any thoughts or any indication on the timelines? Because what I've heard is something might go through by May, or we're still July, or August beginning when the forms are changing. Anything that you have heard or want to share on that?
We have not heard anything specific, like I said, from Fannie or Freddie or any timelines from an FHA perspective. FHA just basically said we're waiting and seeing what happens, and just kind of saying, okay, let's just kind of go with the flow here. I have a feeling that even before that May 1st deadline, that first deadline, that they're going to have to start making decisions on whether or not the seller can pay the commissions or whether the buyer can pay the commissions, and how that affects everything. They're going to have to start making decisions because already, as you guys know, we're seeing it on listings and seeing it on contracts that that information has changed. Now, there are other states that they are already dealing with the buyer's agent commission, Maryland being one of them. And they found a way to make it work from a lending perspective, as far as, really the lender has only very limited opportunity to deal with that, to deal with buyer's agent commissions from a seller or from a buyer standpoint. So I know that it's already being done in some states, but I have a feeling that as time goes on and as we're seeing new contracts come in the door, that there's definitely going to be answers to questions that we have and needed answers. It's kind of one of those things where you have to adapt quickly and you have to, these statements have to happen, but a little bit what we see, especially with FHA, is more of a reactionary than a proactive, proactive nature to what's going on. So we're just going to kind of sit here and say, okay, how can we get this done? So
yeah, and if you have any questions, come off mute or throw them in the chat for sure. I know this has been one where we're just we had this bomb dropped and now everyone was kind of like scurrying, and now it's a sit and wait type of a thing. And you've been in the industry a long time, and I've been talking to agents and I'm just, a lot of people are like, so you look at some of the things that come into effect and it's like 6 months to a year, like next spring, next March of 2025, expect this. And like you said, we're talking like not even a month we're just gonna have to be able to be very almost reactive in the sense that we can quickly adjust. And is that normal, or is this feel like it's being like shoved down the pipeline really fast?
yeah, so it is pretty normal. If you really think about it, when we had COVID, we had to get adjustments to guidelines right away and income and when people were working and whether they were going full time and whether the remote work, and all those questions needed to be answered in a very short amount of time when COVID happened. When you think back even to 2008, after, when the entire market crashed, those questions about who was lending, how could they lend, what could they lend, what had to be documented, all those things needed to change in a very rapid amount of time. Even if you think about when, from a lending perspective, when we came up with closing disclosures versus, settlement statements and the timelines of when those closing disclosures had to go out and all that confusion surrounding those details, that had to happen rather quickly. That's most similar to what we're seeing now from your guys' perspective, because there was a set timeline for it. There were a ton of unanswered questions. Nobody really knew how it was going to work out. And it was just more of a trial and error process. And then since that time, the details have been worked out. Guidelines have relaxed. People have got it under control now. So it's going to take some time. It's just what immediately needs to be done in order to, answer those questions.
Oops. What happened? Oh, Nikki, you muted. Sorry.
Yep. Sorry, you muted me. That's okay. But anyway, the point is that like, we have to deal with what we can today and know that things are going to change. They're going to change rather quickly. And we just have to be there to adapt and overcome. That is the biggest thing that I've learned over the years in the industry is how do we adapt and overcome? How do we adapt and overcome? Market crashes, rising interest rates, things that are negative in our industry. How do we adapt and overcome and make sure that we are still bringing value to our clients and still being that number one resource for them?
Yeah, absolutely. And I'm glad that you explained it that way, because I think it's really helpful to the agents that are on this call listening to it, whether they've been in the business a week or 20 plus years. Think back. And that's kind of where I've been going to. And I've been talking to agents, especially some that have been more reactive versus responsive to this. It's been quite shocking, I guess, to me that's been the case more so than not. And so it's just like, we've been here before and we'll be here again. And we've gotten through this and X and Y and Z. And to your point, it's always been something where, especially on the lending side, it will be figured out. Everything's figure outable. It's just how you get the information, how you come to these types of calls, go to the other calls, and really understand what's going on so that when things on the timelines are approaching or things are changing, it's more important, not now than ever, but especially right now, that you are on the top of it and that you are partnering with amazing lenders like Nikki and title companies and just people that know what they're doing. They're a direct extension of you. I know I've said this on the call many, many times, but this is just another example that you need to be in business with strong business partners. Who you're in business with matters, and how they're going to respond versus react to this situation really, really matters. And getting the right information and looking for the sources of where that's coming from definitely matters.
Yeah. And I did forget to mention, so when I was talking about FHA and Fannie and Freddie, I forgot to mention the point about VA. So from a VA standpoint, the buyers are not allowed to pay commissions at all whatsoever. That is one VA guideline that protects the veteran. And so that is going to be the big question that we have to answer as well. Will that change? If not, how do we get around that? Or how do we, make sure that the agents are taken care of from that manner if a veteran does want to use a buyer's agent? But as of right now, the VA has absolutely said, and this has been for years now, that their guidelines do not allow the buyers to pay any real estate commissions to anybody at all whatsoever at this time. So that's just something to keep in mind as well as we look to veteran buyers.
Yeah, and it's almost like, correct me if I'm wrong, there's, especially with the last 2 or 3 years, where it's almost like there was a stigma put in place around VA, some FHA, and it's almost like we have so many protected classes in real estate. And yet now it's like our veterans, it'll be interesting to see how that will work out, because going into that, I mean, I see it as more of a disadvantage to them potentially, but again, it's how you can shift your perspective of it, because I think there's also, you can find good in every situation. You can find a way to come out on top.
Right. And keep in mind that nothing has to change at this point. Nothing has to, there are changes going on, and people are, you have listing agents who are not listing commissions. You have, buyers that are saying, I don't want to pay you. You have, sellers saying, I don't want to pay buyer's agents. You have those things happening, but we have to keep reminding people that nothing, the changes are going to come. It is what it is. And we just have to, be able to flex with it and still bring as much value as possible. It happens, like I said, it's happened in our industry quite a number of times. And it's always the people that are getting through it, and the people that are coming out, on top and being able to still do business are adapting and overcoming. That's what they're doing. And so that's really what, just a reminder to lean on those, like you said, who you are in business with, and lean on those that can help you through and make sure that, things are going to be as compliant and as, beneficial for everyone in the long run.
Yeah. Do you see a flux of buyers now trying to just get this done before some of the changes, or?
Mm-hmm. Absolutely. Yeah. They don't want to have to, they talked to their agent. They weren't responsible for the commissions from that before. So it's either a question of, do I keep my agent, or can we get this done before any official changes happen?
Yeah.
It'll be interesting to see how builders react as well. Because, for a while there during COVID, builders weren't paying buyer's agent commissions in general. Mm-hmm. So if people wanted new construction, a lot of times those buyer's agents were getting cut out of the process. Now they've started to start paying buyer's agents commissions again, now that we're past that lower interest rate and the interest rates have gone up. It'll be interesting to see how builders react to this as well.
Yeah, no, absolutely. Or I know they're doing a flat fee type of a thing too in some cases, but yeah, so it's not new. It's just a different perspective, or a different part of a larger, I guess, of the population are now going to feel it for sure. But it's nothing that we haven't been through before. And again, it is truly all about the leaders and the people that will get anywhere of consequence in life are the ones that can learn, unlearn, and relearn. And that is
Mhm.
what's so important. And it was said back by, oh, I wish I could remember it, but in one of the books I read that was from the 50s or 60s, he said, going where we're going, you know, in history and then in the future, the people that are going to take over are just that. So especially with this type of things, you just can't get stuck in how it is or how it was. To your point, it's going to be changing. It's going to be changing really quick. We're going to be adapting really quick. So it's
Mhm.
having your resources in line. So any agents that are on here or watching this live stream or watching the recording, think about where you are right now, what knowledge you have, where you got it from. If you're confused, if you're uncertain, if you don't know where to go, you know, look up Nikki or myself and we'll get you in contact with people that can help you, because I've said it before, but now more than ever, it's very important. And it
Yes.
will continue to be important because things are changing. They're going to continue to change very quickly. And, you know, it's almost like we could probably do this call twice a week and have
Yeah,
an
we could.
update, if not more. So at the very least, get to this call once a week. But know that Nikki's here, I'm here in the interim to answer other questions as well, for sure.
And lean on your lenders to encourage that relationship with the buyer's agent. Lean on your title company to encourage that relationship, because there is value there in having a buyer's agent. And you know, me as a lender, you know, I'm going to be honest with you. Can they afford to pay you and still do their down payment and still do their closing costs? You know, I mean, those are questions that I'm going to have to be very, you know, truthful and very upfront and very forward and transparent in answering for you guys as we move through that process. So just know that, you know, your lender, your title company, whoever that is, needs to be there and understand that, you know, those are those questions that need to be answered.
Yeah, it's almost like a different scenarios that you've already always given out, but it's going to be another layer to if
It
this
is.
then that, or you could do this or you could do that, because
Yep.
if it goes through the way it is, there may be some unknowns that we have to account for.
Exactly. Exactly. And unfortunately, it's going to be a question of whether those that are, you know, using down payment assistance and things like that can also afford to have an agent by their side, which is probably the most worrisome part about it.
Agreed.
So, yeah.
Well, good.
But we'll
Any
navigate through. We'll always get
Yeah.
through it.
We will. And Nikki, with you by our side, it will be fantastic. So as always, so appreciate you coming on. Your wealth of knowledge and information, and we're lucky to have you each and every week. So thank you so much.
Absolutely.
Very much
Thanks, Ann.
appreciated. Any questions before we go? All right, I don't see any in the chat. So yes, do you want to say your number out loud, Nikki, just in case people want to get a hold of you right away?
Sure. You can reach me at 952-484-1584. You can email me at nerickson@loandepot.com, or you can find me on Facebook, Instagram, TikTok, and whatever else other platform is out there.
Perfect, perfect. Well, thank you so much. We'll look forward to next week. And again, reach out to Nikki or myself in the meantime if you have any questions at all.
All right. Bye, guys.
Take